Hey, good morning, PD, Valerie, Michael, John, Ben, Michael, Arturo, Alan. Good morning, everybody. If you want to chat with me, make sure you're a subscriber. It's the only requirement while I'm live. And morning, Philip. Let's get into it, shall we? Numbers. PCE coming out this morning. Banks hitting a new record again this week with the borrowing from the emergency borrowing facility that was set up by the Fed. I mean, we've got one of the longest bull runs from March 13th up without a 3% pullback in the S&P. Yet, statistics say when we have a large pullback one year, 2022, anyone, and the first half of the next year ends today, is a bullish run, then we get continuation the second half, more than likely. So let's jump into it and talk about some of the numbers. And I guess before I do anything, we should probably hit this. All trading involves a substantial risk of loss. I may be full of crap, remember, so past performance not necessarily indicative of future results. This presentation here, informational, educational, and fun is the intention. Hope you have fun. And it's not a recommendation to buy or sell anything. Anything from me, anything from anybody else, any financial instrument, don't trade if you don't have money to lose. If you need financial advice, you got to hire and consult a financial advisor. It has a fiduciary duty to take care of you. All right. So core PCE coming in line, 0.3. Market loves it so far. I don't know. Personal income coming in at 0.4. That's pretty good because we were expecting 0.3. And this, I don't know if you saw the headlines yesterday on Bidenomics. The Wall Street Journal, basically in one sentence, blowing that away, saying that in the first, whatever it is, 20 whatever months of the presidency, personal income has dropped by an amount. I lost the number. Hold on one second. Let me see if I can refresh my memory really quickly. Yeah, 3.16%. There it is. The Bureau of Labor Statistics says that real average hourly earnings, tongue tie, excuse me, have fallen 3.16% during the Biden presidency. I mean, how do you argue with that? Biden says everybody's richer, and that says we're more or less not. It's the real take-home pay after inflation and taxes and all the stuff. So, morning Sledge, morning Mad, morning Philip, Maurizio. Hey, how's it going? So if you have questions about anything I say as I go along, remember, you got to ask them. I mean, this is interactive. That's why you come to YouTube and not the Comedy Central of CNBC, right? So what I was alluding to when I first started blabbing. So when we see a large pullback, the return the year before, right now, we had a negative return last year in 2022. Well, historically, look at all these other ones. Even 1975, we saw a negative 1 month, a negative 3 month, a negative 6 month, but then we pulled it out in the end and saw a 9.5% on the rally. The only year we didn't really see that end of the year rally, look right back there, 1961, but 1954 saw a pullback the year before, 1953, and saw nice returns. So 2023 right here coming in, we had one of the bigger pullbacks, and we've already had we had a 1 month rally, 3 month rally, 6 month rally, probably coming in here. We'll see. This is all based on the S&P 500 when the negative year before with a greater than 10% year to date at the end of June following year. So statistics say that we're more than likely to continue this party right on through the end of the year. That's 6 more months. And we'll see. I got a couple cryptos on the list. I don't think Stellar Lumen is one of them, but we'll cover the list here in just a minute. Don't get too far ahead of me. Remember, we keep marching down this thing. We're at like 76 days now, marching on down, well past the 85th percentile. That means we're in the top like 13%, maybe heading up to the top 10% of moves. And that means, upwards of 90% of the time, we've already done a pullback by now, time-wise. The average pullback occurs every 47 days. On the S&P 500, that's a pullback of 3% or more. Got the pink monster here today. That's one of my favorite ones, I think. It's kind of a pink grapefruit, but like other nice flavors. I don't know. It's a sweet pink grapefruit flavor. Kind of nice. Anyway, so remember, this is kind of hanging out there that we had the risk. Yeah, it's an interesting flavor, that pink. It's one of my favorite ones, honestly. Anyway, so like I said in the beginning, also, I kind of hit this as the highlight. We pulled up another week. So it's 8 straight weeks in a row of hitting more and more of this emergency bailout bank term funding program. And it's right on the balance sheet they release every week, right there. Bank term funding program increasing, and this was Wednesday. These were numbers from Wednesday. I mean, if the banks are having to hit the emergency lending facility, is that good? I mean, sure, it may just be a convenience factor, but I don't know. I mean, this is a temporary thing, and maybe it's like, hey, temporary money, let's borrow it. But I don't know. It doesn't say the banks are all clear, despite that report that came out this week that said, hey, no problem. We did the stress test. Everything's cool. So why are we borrowing more and more money from this emergency term funding program? All the narratives don't line up. If you come here, you follow me, you kind of, I try to cut down to the truth, the actual truth here, or at least, when something's fishy, I try to let you know something's fishy. This is fishy. I don't think all the banks are just fine and dandy, and this may not be a problem for the next 3 months, but we go back to raising rates again, and it could be a problem. Speaking of raising rates, let's talk about something else here really quickly. I'm going to talk more in depth about this whole page, but right here, let's look at this. So this is a shift. What you do is you take the Fed rate. This is their interest rate raises and drops. All right. And we shift VIX 2 years. All right. Look how parallel they are when you shift it 2 years. This, when I talk about the fact that the Fed raises rates and there's no possible way for it to trickle through the economy fast enough to have any real effect. They're making real-time decisions on rate raises based on 2-month-old information and current results. But then this right here is suggesting that the market is 2 years. It takes 2 years for these decisions to trickle down into the real economy right here, to really take effect. So right now we're looking at these current rate raises may cause a problem out here in 25, 26. Who's heard me say that before, that we may have a problem, a big down starting in 25? Anybody? This is kind of confirming a lot of things I've said over the years, that we're heading for a big problem here. And yeah, so these rate raises probably take 2 years to really trickle in and cause problems. It's like, it's just operating in almost a naive situation. Sure, they could drop it back, but it's already put on the chart. And that orange is kind of like the VIX 1-year moving average. The gray is the VIX price. We're down here at crazy low lows. We're not the lowest we've been, but This is kind of signaling that we're headed for more problems, and it may be maybe a couple years. I mean, I kind of expected SPX to make an all-time high. I expect NDX to make an all-time high. I mean, if you've been following me since back in October, I've been kind of beating the drum on that. And what we're doing in the short term, I'm not so sure about, but I think we're headed to an all-time high, more than likely. That's my kind of my bias. And Bitcoin is going to top out in 2025 and probably go into a crypto winter late 25 into 26. You know, all of crypto again. Another flush out, you know, more exchanges going bust, that sort of thing. Happens every 4 years. Like this, the next 4-year cycle happens 2024. And we'll probably go on that run for 12 to 18 months after that and then go back into a crypto winter. That probably correspond with a big VIX spike and a market pullback and all the things here. So just big picture, be prepared. All right, that's big picture. Now, so that kind of took us from the micro, you know, the next few days, the next, you know, half up through the next couple of years. All right, but what's actually moving today? That's what we all care about. That's how we make the money, right? So let's pop over and look at it. You know, like I said, S&P 500, just grinding here at the top. I do expect somewhat of a bigger pullback, you know, mostly because statistically we're going to have a 3% pullback. It's going to happen. Now, we could set the record on the longest period that we go without a 3% pullback, but then we will have one. It will happen eventually. We're not going, it's highly unlikely we go new all-time high than we were back in, you know, January 2022 last year without getting a 3% pullback before we get there. So I think the risk is for that 3% pullback. You know, right now we're sitting here, the high back here on Friday, June 16th. And we are right up in here at the 786. This can turn down violently. We didn't find the resistance at this level down here. And we may be working on an extension right now out to 45.28, which does give me some caution because of the levels I've been talking about. Yeah, happy, well, it's kind of 4th of July weekend, but then 4th of July is on Tuesday. So the market's closed on Tuesday next week. That's just weird. I dislike middle of the week 4th of July's. I mean, raise your hand if you're with me. I like it when it's on the weekend, you know, especially on a Friday. You gotta get the Friday off, Saturday, Sunday. Anyway. So, yes, exploding higher on that PCE print and the personal income. That's exponential. Be careful. I mean, last time, a couple days ago, we went pretty much exponential, got some chop. Now we're running again. Maybe in for some more chop. Just keep an eye on it. But right now, this is kind of indicating that we may see this blow on out. We may get above 4,500. Golly, excuse me. That pink monster talking back to me already. In Q, big reversal there. We were down here. Now we're ripping up here. Still not getting up to the 786 level like the S&P. I don't know. This one may reverse down hard and may take the S&P with it. This may be the one to watch. If you're not sure on NQ, what the heck NQ is, that's QQQ, NASDAQ. Why am I looking at the futures? Because they give me overnight data that you don't see on the SPX chart. SPX does open here in about a minute. So we will have data, but right now all the overnight data is just missing off this chart. So I usually look at these charts to get that overnight data. When we zoom out and look at the daily, and we're just way up here in the fluff zone without a 3% pullback. Just historically, we get a 3% pullback. Now, Russell signaling that we're probably getting out to the 1955 area, potentially breaking on out here. This is a beautiful, beautiful chart and likely going higher. So not sure we'll see a retrace for those of you following opening bell alerts, but I mean, that's a bullish potential breakout. We get above 1930, probably going on extensions and setting the path for the bigger move up into this 2200 area on Russell. And you might be like, what the heck, Russell? IWM. IWM is the ETF. CL getting a nice 3-day bounce here. Can we get the continuation? I don't know. We have to break out above this 72, almost 78 area, 7280, 7290-ish. I'm going to send an alert there. We start breaking above that, we can go get that upper target. I am long UCO and USO, looking for that target up there, and it may or may not work. This is a sideways consolidation, nasty, gnarly pattern, and it's unreliable, so be careful. I went long on the initial bullish pattern, and it kind of has let me down, so just kind of waiting it out here. GC, a potential reversal. It did spike down, hit my little target area, and if we break back above 1950, that's the initial aggressive kind of signal that we may be on a way up, but we need to break above this consolidation that we did right up here with the high right at 2000. I mean, that's $50, that's an aggressive entry, but that's also more risk that we could see further downside. So these are the trade-offs. Do you chase it aggressively to try to make that extra buck? You do add more risk because we could see further decline. But this is looking like a prime reversal candidate right here on gold. Well, what would be ways I would play that? Well, I am playing it with GOLD. That's Barrick Mining Company. And I'm hunting a position in GLD. So GDX and GDXJ, not the best looking right now. So Bitcoin, look at that target. It looks highly likely to just reach up there and tag that target at 32.8, possibly 35. And if it plays out the same move we made from March to April, that would put it up here around 40,000, 39, 40,000. Beautiful if it plays out. Ethereum on a different path and is having serious trouble breaking out of this consolidation. Whereas Bitcoin Cash, look at that monster move right there. Probably going to get that $400 target I was talking about a few days, maybe yesterday, a few days ago. I don't know. That's where we consolidated back here at the top of the range. And then we consolidate up here. So if it can break up in there, they possibly get up in this high 700 area. But that is a monster move with no pullback hardly whatsoever. And eventually it's likely to do an outsized pullback. Be careful. I just happen to be holding about 100, what was $100 of it. Now it's like $300 with it, worth of it. I bought it back down here when it was like about 100. It's crazy. I didn't do it as a trade. I did it as a transfer, and I'm just going to hold on to it, see how high we go. I think 400 may be my stepping off point. Litecoin also getting a nice move, about to break out here. This sucker breaking out, that can put it right up into this 120 area. We do have a halving event coming up here in August on Litecoin. That can be a catalyst for this to get some continuation. And I don't have targets on this chart. Yeah, that move tops us out at 120, and this move tops us out about 150. Not really expecting a lot more than 150 right now. Now this thing could get crazy and go ripping off and hit some of these upper fibs up around 600, but I don't think that's the high likelihood path right now. 120, I feel like breaking out above these highs would be nice. Then 120 would be a reasonable target. 150 would be a stretch goal and be awesome, and anything more than that is gravy train. So that's where I think we are on Litecoin. Other people may disagree, but I think that's where we are on Litecoin. All right, I skipped the dollar. Dollar popped up and bouncing off the roadmap line so far, looks like. Right there. Tagged it right back down. I kind of said that was a path a few days ago. Now, can we roll over, break the lows, and get the extension? That's what I would expect for the next move. It could poke a little higher over the coming days, but right now, holding the roadmap line, extending lower is the primary expectation of a path forward. And now that we've done this, we can probably run a fib right up here. May have to extend it, but 101 and 100 would be the next downside targets, and we may do it in a bouncy kind of stair-steppy fashion going on down. Top, and the market opened. So we've got real data, top popping back up to the roadmap line. That looks like a freaking dangerous chart. I mean, look at it. That's what I talk about all the time. Exponential up, exponential right back down to where we were. This happens more often than not. I mean, that was a crazy move too. What the fudge? That went from $6 to $2.50, back to $6, back to 11. What a ridiculous move. AUPH, pharmaceutical, biotech, got to be careful on that stuff. Probably going to retrace that move. BGH, another healthcare related. That looks like a dumpster fire right there. My gosh. Be careful. That chart looks like garbage. Hot garbage, on fire, probably going lower. Apple, and 199 is the target. I mean, I put it on all the way back here last summer. 199 is my target. We could break out and go up to 220. I think it's going to break a lot of hearts. People counting on 200. We may get a pullback, a serious pullback off of 199. So, STZ, Constellation Brands, probably coming back to the roadmap line right down here around 233. Nike, disappointing on earnings last night. Getting slammed a bit. I mean, it wasn't even that bad. I mean, they just kind of came in line, really. But I guess whatever they said wasn't what people wanted to hear. This looks like a consolidation under the roadmap line. Target can be down here and lower. We could go revisit the low again. This is choppy and gnarly and not bullish, so be careful chasing Nike anywhere at this point. It can just hang out in this zone and go that way for a while. MDGL, another pharmaceutical, biotech type situation. Be careful. This crap doesn't follow my patterns all the time. It does make the top movers list, but I just have to caution people on trading stuff that is unreliable. If you like to gamble, pharmaceuticals, biotechs, that's where it's at. Some people make good money doing that stuff, but I'll just stay out of that game. I like the more reliable charts. So MSTR was showing a pop on this Bitcoin move, but retracing it, that's classic. You know, retrace it, find support there, and break on out. That was a higher high. It does tilt the scales to hitting 366 on the upside, possibly 394 if we really get excited. And I just moved the whole fib line. Awesome. So that does make 366 kind of likely. So, and there we go, 369 if I actually put it on the candle top. So 369. Need to break back on out though. Bitcoin must be getting... Bitcoin's not pulling back, so it's just MSTR. People selling the breakout. It'll probably find support and turn around and rip more than likely. That's just typically what happens there. SEDG. I wouldn't buy it till it's breaking back out though. It can go deeper and doesn't have to hit the target. It just the higher likelihood is that it will go out to the target. SEDG, especially since I've been talking about it for a month. I mean, Solar Edge looking like garbage, but it's really, when we zoom out a little bit, it's just going sideways in this giant range. Same range it's been stuck in since 2020. It's a big range. It goes from 190 up to about 380 and just kind of churns. I mean, not trending, just sideways. You could play the bounce up and down, but right now it came up short of the top and looks like it's rolling down back down to the bottom, which may not hold if it couldn't get up to the top again. MDB keeps making the list lately, keeps grinding a little higher. We got the major resistance up here where we topped out, and had this consolidation. So 40-50 area, probably where it's headed. SMCI after the little pullback, trying to break up, but it may roll over. This is holding the 618 so far. That can lead to a bigger downside. This upside move, you know what I'm talking about, this initial move, we're holding the 618 so far. Yesterday, rejecting hard. Today, showing a little green, but if we start breaking below this low, below 231, yeah, 231, watch out. We can go fill this gap at least at the minimum. That gap on NVIDIA, getting excited. We can go fill that gap and possibly go back to the roadmap line. And by the time we get there, it may be, you know, this may be up there. You know, this may be up here like this. Something kind of like that. So it may be over here when we get there later in July, maybe in August. So this thing could just kind of drift back off right down in here. That makes sense to me. NVIDIA, I'm going to maintain my path, you know, back to the roadmap line. Maintain everything I've said so far. Netflix getting a little excited and is probably going up here to the 500 level. I mean, I keep beating the drum on that one. It doesn't matter what it does in the short term. It's probably headed up to 500 into the fall. EMPH. If this breaks down below this low from back here in May, probably getting the extension down here at about 100, 115. DEO. Yeah, just under the roadmap line and churning. That's not awesome. Look at that nasty chart. It's not garbage, but it's just sideways. It's not moving. It's just stuck in a range. Big box. Like, put it that way. I mean, sure, you can make a few bucks chasing it up and chasing it down, but that's, I don't like stuff like that. I mean, I just don't. It's not my kind of trade. I like stuff moving. This one looks like it's done a bullish retrace back to the roadmap line, and the next break above 12 could get us much higher. And we get above that 1278 level right in there where we made that little high on the way down. This is what I'm warning about on SMCI. See how we did that retrace, pop up, and further down, back to the roadmap line. It's a classic pattern we see over and over and over. This one happened really fast. We break back above these highs right around the 618 there, around 1230. Probably going for 1650, possibly 1870 en route. And Boyle, just churning in here, and I threw natural gas on here so I could talk about Boyle. Just churning. I mean, it's natural gas is not going anywhere. It's just consolidating in the range that we set back here from February. Late February, you know, the last week of February, we made this crazy move, and we've just been inside there. And until we get out of there, we may pop up, hit the roadmap line. This may occur as the roadmap line comes down further. Could come up here, and then we could very well go back lower again. This does not have to break out. Russian natural gas is getting back on the market, even though they blew up the pipeline and whatever. They figured out alternate ways to sell it to people. There's no shortage anymore, despite what everybody wants to talk about. So be careful. All right. My bias for the day, well, right now it seems to be long because ES definitely trying to break out. The pattern would suggest we're going for an extension higher. At this point, 42.28 on the upside. The grind higher continues and stacks the odds that we're going to get an even bigger retrace than 3%. The further we push this thing and the longer we push it without getting any kind of pullback. So be careful out there. I'm going to be on Ask the Pros later today. If you're in Discord, I'll try to hit you a link. Just the regular free Ask the Pros at noon. And otherwise, I'll be back with you on Monday, the July 3rd. I guess Tuesday is going to be weird. I don't know. Figure out what to do with 30 minutes of awesome on Tuesday, being the 4th of July. It's kind of weird. Anyway, have a great day, everybody. We'll see you on Monday. If you want to come join me in Discord, I'll be there all day. Links in the description. Remember, don't buy anything. But if you want to come talk to me in Discord, it does cost $5. So have a great day. Bye for now.